Hey everyone, and welcome back to another portfolio update video. The portfolio is currently sitting at $7,733.45. For the day we are up 52.45 as well as 693 after hours. For the week we are up 66.25 or 0.86%. For the month we are up 113.96 or 1.5%, and for the 3 months, or essentially all time, we're up 233.45 or 3.11%. As you can see, we have basically no options positions because pretty much everything expired. But yeah guys, as you can see, if you follow my community posts that I post on my channel, you saw this post and it basically just shows off. We had, 90, 93%, 90.32% gains. Basically everything was just fully profitable. You can see tons of cash just coming into the account from these options, and then you can see they all expired worthless and were worth 0.01, so that was great, and that's why we have basically no positions in options right now. However, for the positions we do have, we have a SoFi $7 put, which I opened on Friday because they have earnings on Monday, and I wanted to get into this before the IV crush, so I opened that on Friday. We have the key $12 call, which is kind of underwater again, but that is a good problem to have. We have the SoFi debit spread, which is actually doing pretty well. It's up 17% overall. You can see we're on total return here. And then for shares, we just have like a gajillion share positions now. I'm not even sure if I'm going to cover this, but basically all the stocks that I've been wheeling, I'm just slowly dollar cost averaging into over time. So even if I don't end up getting the 100 shares, I'm just buying a little bit of them every single day anyways. And then I've also been buying the Yield Max ETFs, so like Tesla, FBY, NVDY, AMZ, and Google, Apple. These are just essentially covered call ETFs on the underlying stocks, so it just runs covered calls on Tesla, Facebook, or I guess it's Meta now, Nvidia, Amazon, Google, Apple, and these pay out a pretty big dividend yield, as well as BITO is the Bitcoin futures ETF that pays out a dividend based on, I don't even know, something to do with the futures. I'm assuming they're selling futures against their position, but yeah, so I'm kind of experimenting with these right now because they pay out a large dividend. We'll see if that's sustainable. I'm guessing not because it's a little bit ridiculous. But yeah, we're just gonna hold these and see what goes down with them. And yeah, you can see here are all my reoccurring investments. I just think this is like such a great feature on Robinhood. So yeah, we're gonna hop into the portfolio spreadsheet now. Alright, starting off here, we got a WBD put, which I closed out early for a gain to free up some cash. I then ended up closing a T covered call for a $2 loss. I then ended up opening a T caller, so I closed this covered call so that I could open a caller. What a caller essentially is when you sell a covered call and buy a put. So I'll give you a little example here. Let's see, we're looking at, let's just do T again. It's essentially a way of hedging your downside, so an example could be, let's see here. It's as if I sold the 15 call and I bought the, let's say 13.5 put, and you can see I basically make the gains from the covered call, but I'm also covered on any downside past 13.50, and this will basically protect my shares from anything that it drops to past 13.50. So it's basically a way that I hedged myself against T's earnings, which ended up actually coming out good, which is why I ended up closing this at a loss, but I'm okay with paying that sort of like $10 fee to be protected in the long run. So yeah, that was the first ever caller we've opened, but I think it was a good choice. Next, we had a Labu put that expired worthless, and this was that original 45 DTE. This was the second ever option that I ended up opening in this account. You can see I opened this all the way back on June 15th, and it just now expired, so that was a really long term 45 DTE, and this thing, honestly, it fought till the end. Like it still had a ton of premium even in the last week, so yeah, it ultimately ended up expiring worthless though, as you can see most of these did. So next we got a key cash secured put, which I sold for 28, expired worthless, so that was a nice little play. Charge Point sold a put for 16, expired for 0. Labu sold for 9, expired for 0, and we had 2 of those, so sold for 18 technically, expired for 0. You can see all these gains here, tons of gains. Let's see, we're on Labu, so now Ford. I sold a Ford put during earnings for $10, which I ended up, this was the roll that I did here. I rolled down to the $13 strike to sell this, which ended up expiring worthless. A Labu put, which I rolled up, ended up expiring worthless. A GPS, which is Gap, a new stock I'm looking into. I sold a cash secured put for $10 on July 24th, and that expired worthless yesterday too, so that was a really quick sort of cash grab on Gap. And then T, I sold a call for literally $1 of credit, and it ended up expiring worthless. So yeah, that is all the options plays. You can see there was tons of plays this week, and honestly, I'm going to start doing weeklies more often, I think. So you're going to start seeing a ton of plays in August. Also, if you see here, you see we have $9,237 currently available to us to sell options. So next week, I'm literally going to be putting all of this to work, and we're going to see just how much money we're able to crank out in 1 week, because this is an insane amount of money. So look forward to next week's portfolio update. But yeah, aside from that, we're going to address our 2 big share positions and what's gone down with them. So for the past week, AT&T has pretty much just been slowly dwindling down. It had a very good earnings report, but it ended up just dropping anyways, which, you know, at this point, kind of just, I mean, AT&T is kind of just, I don't know, it's been just slowly dwindling down, but we're collecting premium, so it is what it is. We're down 10% on this position, or 150, because our original cost is 16 minus the, I want to say about $40 in premium. So our cost basis is kind of around 1560. So yeah, I'm thinking of selling a far out expiration call on this just to sort of hedge my downside. But yeah, that is what T is looking like. Next up, we got Key, and Key has done nothing but continue to just smash the price, pretty much just go up and up and up. You can see we are up $331 on Key, which is 35%. Average cost of $930. If you guys remember, I just bought 100 shares outright around right here. Honestly, it kind of looks like insider trading because of how perfect of an entry it was. I mean, that's literally the exact bottom. Bought 100 shares exactly at $930, and it's done nothing but tear to the upside. Not to mention, on premiums, we've made tons of money. That Key short put made us $30, so technically our cost basis is $9, and then we have this call that has kind of been getting wrecked, but we originally opened it for $1.40 in premium. So this means our cost basis on Key is somewhere in the 7s, which is kind of insane to think about, because that means when this call ends up expiring, even if it's in the money, we'll make about 60% on our position, which is kind of insane. That's kind of just the power of selling options, I guess. But yeah, so Key is doing really well, and it's kind of canceling out AT&T, because AT&T has done nothing but do poorly, and then Key has done nothing but just do amazingly, and together they kind of cancel out, and actually Key kind of overshadows AT&T and just kind of brings like a positive light to it. So even though AT&T is kind of dying, Key kind of outshines it and is carrying the portfolio right now, which is why we're still hitting new all-time highs, even with T just continuing to drop. Hey guys, this is from the future, editing Nick. I'm in the middle of editing this video, as you guys can see. Just trying to get it out to you guys, and I realized that I didn't talk about a new position that I'm slowly adding into. So I'm going to add a little segment here. I know this is kind of random, but let's see. SSO. There is an ETF called SSO. It's essentially a 2x leverage S&P 500 ETF, and what I'm looking to do is to slowly dollar cost average into this position. And this is because I want to get some of the growth of the S&P, and eventually I can build up to 100 shares and sell options against it. As you can see, it has pretty great options premium. But yeah, I just needed to add this in here because this is kind of a significant thing I'm doing. I'm really trying to get some of that S&P growth and trying to de-risk a little bit. And I'm probably going to look towards owning a lot of just the S&P and then selling options against that, as opposed to a ton of random stocks, because I just think it would be a more risk-off way to play the market. So yeah, I'm just buying a little bit every single day of SSO to eventually build up to 100 shares, and then at that point I'll sell options against it. So yeah, I'll talk about this more in next week's video, but I just want to talk about this new thing I'm doing. As you can see, I currently have 8 shares. But yeah, back to the video. But yeah, that is this week's portfolio update video. As usual, we're just keep grinding higher, keep making premiums, and yeah, I'll see you guys in next week's portfolio update video.